Okay, guys, good evening. This is an update on TSLY and Tesla. So I owe you 2 days worth because of all the stuff going on with declaration. So what happened over the last 2 days for Tesla? Well, Tesla went down 4.23 on Monday in the bloodbath. Obviously, it was a lot worse. I think it was down in the low 180s on Tesla, and it ended up, as most of you know, on Monday we rebounded. On Tuesday, we moved back and forth, but generally we were up 0.88 just from a Tesla perspective. So looking at Tesla, since we certainly weren't capped, we only went down 3/4 of the move on Monday. And the same kind of thing, we were way down when Tesla was way down and came back. And then we also moved up and we just about doubled what Tesla did. Tesla went up 0.88 and we went up 0.151. Now, please be aware, and it'll show in the stats that this is X-dividend on 8.6, right? So you had people buying into. I just missed a buy on Tesla. I was trying to get it at 1366 and it was around 68 or 69. It had been lower and it just never filled and I didn't want to chase it. And obviously it went up to 1410. Now, what I'll do is I'll just buy some on X-dividend tomorrow because we should open up around, take the 96 cents away. So that says that the pre-market should be around 1314, 1313, and then it trades with whatever the day has for it. But I'll get into that a little bit more. So those of you that aren't aware, I know 90% of people watching this understand that, but I get a few questions that indicate people don't really always understand it. All dividend stocks, regardless, you would just never notice if they pay a 3 or 4 cent dividend or a very small amount. But on these YieldMax and some of the covered call ETFs, they pay a substantial amount. So you really notice it. So the rule is they always have a declaration date. If you go to ProShares, though, like on BITO, they declare after the market closes. So you never really get a chance to know what the declaration, in other words, what the pay amount's going to be before you encounter X-dividend. What does X-dividend mean? X-dividend means it trades without the dividend. So you could have all day on 8.6 bought Tesla knowing that you will receive the dividend amount, which is 96. Let's go, well, I'll go to that later. 96 cents, essentially. It almost rounds to 97. Okay, almost a dollar. So you will receive that on August 8th, as long as you held it before or bought on 8.6. If when the market opens for 8.7, and you'll see this price adjusted after the after hours closes on 8.6, if you go and look at a quote, you'll see like 14.11, like I was talking about 14.13, right? You want to take 96 cents away from 14.10, that gives you around 13.14. And what happens is as that starts to trade, then it's on its own merits in the stock market. Sorry to spend the time on it, but I just want those that don't know to be educated. And so from that point on, it could recover in a day, right? I mean, it may go down further than the 1314 quote open price. So this idea that always buy on X dividend, yeah, if you go in very early in the pre-market, you can pretty much get that move. But sometimes, if there was some situation in the world that created, if the Fed came out and said we just cut rates a half point or a quarter of a point in emergency, and they announced it pre-market tomorrow morning, I imagine that everything would show an up price, right? So I mean, I'm giving you extremes, but that's reality. News drives the market. Okay. So let's look at stock shares and what trades have been put on. So on Monday, on the bloodbath day, although we recovered a lot, 375,000 shares were bought. And I understand that it was super on sale. It was still pretty on sale here, so 50,000 more. But they actually did something with the money and they put on a synthetic on 8.5. And what they did was they put a synthetic out on their 260. So that expires on 8/16, a week from this coming Friday. And they make a lot of money when they sell it. So I'll just go show you. I'm not going to pull this sheet over and show you that. But on the 260, whoops, sorry, 265, this is what they put on. Why isn't that? Something's going on here. It's not wanting to pull up, but that's okay. This is in, oh, am I in the right? Oh, I'm on the 260. Hello, Bruce. Okay. They didn't put any more. We have a 265. They just didn't put any trades on it. So what happened is right here on 8.5, they had 650 synthetic contracts. It's a buy a call, sell a put. So look at the difference. Before, when we were higher on 8.1, we had to pay 64 cents, right? You had a little more time left on the 8.16, and you could sell the put for 40. As we went down in the bloodbath, okay, we could get 58.77 and 12 cents. So that put another like 3.8 million in our kitty. But the ugly part, remember, where you're positive on one side, you're way under this, right? We're setting at 200. So by 816, we got to roll out of these and take the loss. And then again, we could sell a higher one and get back and play that game back and forth. But ultimately, you want TSLY to move up, but you don't want it to move up in 3 days and get us totally capped on all the calls. So there's that yin and yang that I always refer to. But this is lowering, these are losses, right? Positive numbers, but it's lowering that. Okay. So what we have is, let's go to our weeklies, and then we see where the 650 were written at 212.50. So we're still almost 6% out of the money. Okay. And these are all 8.9. So we look really good on this big one at 220. I mean, who knows what can happen, but my guess is we probably will move up some more, but my gut says we're probably safe in the 3 trading days with the 220. Um, so that's the best scenario that we have for now. Ultimately, TSLY needs to move for next month's payment. Besides just collecting our weeklies, we need to move up. We need to roll into a better synthetic price because we have to buy. They may even roll this Friday. They may wait till Monday. I don't think they'll go all the way into 816 because there's no premium to be gotten anymore. Um, all right, so let's go look at holdings. Holdings always tells us. So I've went ahead and updated this all the way through 8.6. So something you'll notice right away, I kept looking at the numbers and I was like, okay, our actual close is 1410. Net asset value is 1308. Well, that's because they updated everything and they show all the cash pulled out to pay us on Thursday, right? Because this reflects really, the Wednesday afternoon of having the cash pulled out. So that's why we're seeing it. They've pulled the cash out, so therefore the NAV goes down, which is exactly what X-dividend is showing you. They've taken the payment, they've stuck it somewhere that can't be utilized because they're going to pay it, right? They'll probably go ahead and put it in the bank and the trust company that distributes the money, then they put it out Wednesday night or early Thursday morning and your broker has it for you. So that's why X-dividend is a day before. And that's why if you buy it, it's cheaper, right? That pre-market is going to open up. So, okay, enough on that. So let's look at the other things. We're looking good, right? We've captured 86%. Now, if I was these guys, if this gets to be 90 or greater, just take it off the table. There's not, well, at a million, I'd say watch it, okay? And if we rise a little bit, okay, wait till Thursday and then sell your call, get 6 days. So it may not be, but something like this, it's 6.5 cents. If you can buy it at 5 cents, just take it off the table. Keep the cash for buying in your next weekly. It's just not worth if this thing were to take off. Not that I think it's going to go by 232, but I just have that rule. Something that you've won, just take it off the table. Don't give the markets a chance. Um, all right, so that's what we have. Now look at the synthetic. This is why I say no matter what you do in collecting that 3.8 million, to lower your loss. Look at this, it's 210. Well, guess what? When I ran the numbers on the day before, it was even greater. So 210 is both. They have a small quantity of the 265. And all of this will get taken off the table probably this Friday or the following Monday. Okay, just because there's nothing left to gain, you just got to deal with the loss. So they need to get through declaration, get through their payment this week, and then on Friday or Monday they'll deal with that. So we look really good, 86%, 54%, 98%. So out of that 7.8 million we've written, we would only have to pay 1.1 million. So no problem. Let this thing get down in under 10 cents, 2 cents, whatever. When I first looked at it, I said, oh, 86%, but hey, there's still a million. I probably wouldn't play games with that. Okay, so this was the brand new one from yesterday, but we sold that for like 221. Right? Here, 222. And look at it. Because we're just staying flat, even up a little bit, um, then you see how that's already been more than cut in half. We've captured 50. Now, it's a small amount of money. But that's how time erosion happens on these things. It's got a high theta, which is really the time premium. That's the Greek term for time premium. So normally I just say decay in the premium that's based on time. Okay, guys, that's what I've got over here. And this, let's go over to payouts and just really discuss. I cleared this up with you. And again, this is ugly, right? I mean, it did go from 207 to 201 because we moved up a few points, right? But we really need to get that down if we want to have a good payout next month. And it can. I mean, it's a whole month away. All right, let's take a look at payouts. That's where the rubber meets the road. So we all know what we got paid. If you saw my video and want to watch this stuff, I think Tesla was one that wasn't hurt. Some of them, like Amazon, were really, boy, that thing, they did not pay what I thought they would pay at all. I'm sure that fooled a lot of people. So our share count is just so high that we have to work with big numbers. So look at this synthetic. When we take that in theory, we have 131 million gain. So we earned 230. They paid us 96. But guys, we owe $4 on this many shares. That's what the 201 is. Well, it's not quite $4, but call it like 380. So this extra $1.30 is needed because we got about 380 in debt. Okay. This one is still showing a negative, and that includes this week, which we should win. It's just this 209 million out there on the two added together. That's what drives the $4. So we just want this thing to get back 220, 230, 240 like that. And if we just take our loss on that, like on Monday, Friday or Monday, and write something around 210, 220, something like that, then we got a target to move through over the couple of weeks time frame. All right, guys, that's what I got for you on Tesla. I mean, it's so cheap relative to things. Again, it's going to be, 13, 14, and let's say the market goes down a tiny bit, it could be $13. To me, but again, I'm looking medium term, longer term. And honestly, like I tell you guys, it isn't always the play. This is an income fund. If you need income, I'm really bullish on Tesla for the long term. Does that mean that the markets couldn't have a 20% correction later in October, September, and this thing go down, to $9 in reverse? Sure. But where is it going over time based on all the tech that it's got and all the advantages? I think it goes much, much higher. So for me, I use other plays because I hate the capping portion. I just hate it. I'm in this fund. I own a fair amount. I'm bullish on it, but I also do other things because the capping drives me nuts. Okay, guys, again, it's not financial advice, not a financial advisor. Have a good evening and good trading day for all of us tomorrow. Okay, bye for now.